Good evening, it's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit the website www.cfds.com and certainly learn more about products and services. Alternatively, you can visit the educational site, which is www.cfds.education, to certainly learn more, where I update charts and videos, etc. Okay, let's have a look at the FTSE 100 itself. The FTSE 100 certainly finished weak on the day, and the reason being it was twofold, threefold, fourfold. First of all, we had Rollys Royce. Okay, that's certainly a concern with regards to an investigation pending. Then we had Glencore shares. That was certainly weak because of the sale of its copper mines in Australia and Chile, in obviously a bid to reduce debt, etc. And that was obviously interpreted as being bearish. And given the fact that it's up quite stellar over the last 7 to 8 days, I think it's almost doubled or tripled in value. So certainly a pullback was certainly expected. The other factor is oil. Oil obviously has held a $50 region. So if I bring up the chart of oil, as you can see in my weekend video, I did forecast for the oil to drop, and that's exactly what's occurred. And that obviously has caused the the FTSE to certainly come into resistance and turbulence as well. Okay, now the only bullish factor in the morning was the fact that we had China up by 3%, which is pretty impressive, and that was really the only bullish factor. And given the fact that we had some comments about China bottoming and etc., you can certainly see that by the chart of the Shanghai, and you can see here we had quite a stellar move overnight, up 3%. But we are obviously coming into turbulence now with regards to the Chinese market, and it'll be interesting to see whether we can actually sustain this move and push this move higher. Now we can also bring up emerging markets. That'll be an interesting. We've got the CRBQ here, emerging market index as well. We actually had the emerging market index negative on the day, so that's certainly something to consider. I mean, that move in China could certainly be interpreted as a backward move, or a move that was lagging, or a catch-up move to global markets, really, and a lot of it was probably already factored in. But either way, we certainly ignored China, so that exactly isn't bullish from my perspective. And given the fact that the markets chose to focus on commodities, as you can see, copper is certainly weak. You can certainly see oil is certainly weak. We also had the zinc obviously into resistance today as well. So if we bring up a chart of zinc here as well, you can see here we had quite a pullback on zinc as well. Given the fact that the dollar index is actually into support, so if I bring up a chart of the dollar index, I did highlight this yesterday that we are coming into that 200 MA on the dollar index, and we are going to potentially find support. So this is going to be very interesting now in terms of the movement on the dollar index. We have had several hawkish statements and comments out today, but the market is distorted to a large degree. Why? Because of the actual light volume, or the US markets being on holiday. So that's certainly something to consider as well in terms of trading. And you can see here that the dollar index now has a falling, contracting wedge pattern. Okay, and that's considered to be a bullish move or bullish formation, because the H&S formation on the dollar index has completed now. So I'm going to eradicate that and take that away. Okay, and the unfilled gaps above will all be potential targets now, given the fact that we've had several hawkish statements. So all these gaps above certainly remain in play. Okay, now the other factor as well that we need to look at is the Aussie and the Kiwi. The Aussie has been quite stellar as of late, as you're already aware. Now all the focus remains on the daily chart. The 4-hour chart has put in its first bearish engulfing candle, so that's certainly a early indicator as to the fact that currencies are certainly going to start seeing weakness, which in turn means that the dollar is going to start to see potential support and strength as well. So all eyes on that in terms of the movements there. Also with regards to the Aussie, you are going to see some pullback on the Aussie as well. So this is certainly an index or a currency pair that I will be looking to short in terms of the Aussie, given the fact the FTSE itself has confirmed weakness today. Now again, the light volume factor is in play, so the US markets light volume, etc. That will certainly dent any ability for the markets to fall, so just bear that in mind. Okay, so Rollys Royce obviously one factor, Glencore another factor, oil prices, commodities another factor. So these are all obviously Standard Charter was another factor as well in terms of the sector being downgraded, etc. SAB Miller and InBev, the potential uncertainty there. Although towards the end of the session it did come back with a late counter bid or offer, etc. Standard Chartered shares fell 3%, saying that a rating cut by the Investec to hold from buy, etc. So certainly several factors at play, but mainly it was due to the fact that commodities obviously were into resistance and the dollar is actually trying to find support. Also, we had the BOE's Shafiq's comments with regards to, and also Mr. Carney's as well, with regards to not waiting. Obviously not waiting to raise interest rates, i.e. not relying on emerging markets, downplaying the argument that emerging market debt was a concern and that was going to be factored into the decision making. Negated that argument, and also negated the fact that the argument of waiting for the Fed to move. So they're certainly independent of the Fed as well. So these are all factors, okay, all factors in terms of forcing the FTSE itself onto the bearish aspect. Initially, I did go long FTSE, given the fact that at 6,400, given the fact that we had a rally in the Chinese markets, and obviously given the fact that you had light volume towards the evening, given the fact that US markets are away, that did not transpire or did not materialize in terms of forcing the FTSE higher for the right shoulder. So if I bring up the FTSE chart, as you're aware, in my weekend analysis, I explained that the volatility index is actually into support. You can clearly see that on a 60-minute chart, bearish, a falling contracting wedge. We're breaking out of it and now looking to potentially move higher. So the FTSE 100 index itself, as you can see, the daily chart, looking at it from a technical perspective, I did explain to you that previous support equals resistance, and that's exactly what transpired. We've put in a bearish engulfing candle on the FTSE 100 chart now, and that's signals a potential reversal is underway. The 60-minute chart, higher highs and higher lows are now vulnerable to being broken down, and that's exactly what's happening, even though we did finish towards the end of the session with a bullish engulfing candle and negating the red candle. Circumspect move, given the fact that, like I said, you have light volume and that's causing the markets to certainly push higher. So given the fact that we had the H&S formation, well, not complete as of yet because the target is 6341, we are in this bearish channel. Okay, so certainly into this bearish channel at present and looking for a potential target of 6340. You have 6340 as a key support region, so again, watch out for 6340 in the FTSE. If that breaks, then you have 6305, which is the next key support level. If that breaks, then you have the level at 6250. I will not be surprised to see that 6250 level, but again, we'll have to see how markets respond. Given the fact that we've broken out this key support or key diagonal trend line now, the next level of support really is 6300. And if that cracks, then you have previous resistance equals support between 6285 and then obviously 6250. So those two areas are going to be very interesting as to how the market reacts when it gets there. But for now, certainly in the bearish camp in terms, or given the fact that versus obviously the light volume flow up, again, that needs to be respected and that needs to be observed as well and taken into account. Okay, so FTSE 100, keep an eye out for the levels I've explained. You do have this key diagonal trend line, so certainly needs to be respected here. As you can see, the market is certainly respecting that for now. Argument can be made with regards to an inverted head and shoulders formation, taking the pivot high here. So left shoulder here, obviously head here, looking for the right shoulder, and then obviously a thrust higher back to 6400. But again, it all depends on how the US markets trade with regards to the, obviously taking into consideration the light volume. If I just bring up a chart of the S&P 500, I should be able to give you an insight as to how that's trading and a projected move from there. So I don't think I've got it saved in there, so I'll just bring that up. So you've got the Dow, just bring that, and then the S and P 500 index. Here we go. So looking at it from a daily chart, we still have that doji candle. Get rid of these pivot points. Okay, so still doji candle. So until we crack the 2020 level, bias remains bearish for me, and that's basically what I'm expecting, and that's what I envisage. Okay, with regards to the S&P 500, the 60-minute chart itself at present, again, like I said, it is light volume, so a lot of it needs to be ignored to a large extent, but as long as we hold that pivot level at 2020, the market remains bearish from my perspective. Now looking at the Dow quickly, look at the Dow Jones, again, that's quite an important area to watch out for. We are back into that previous support equals resistance zone, so that certainly needs to be respected from my perspective. So again, Dow is certainly into resistance. Again, I will negate a lot of today's move given the light volume and the manipulative nature of the actual index itself, but for now, you are in this channel, and again, we will watch this channel very, very carefully for any signs of weakness from my perspective. Again, looking at your diagonal trend line, looking at your support, resistance, etc. We're in that channel there. Okay, and looking for it to potentially break down a HNS would be perfect reversal there. Okay, 5-minute chart, again, looking like a nice HNS reversal. Given the light volume, it's going to be very hard to actually see anything in terms of downside sell. You can clearly see here exhaustion and obviously a potential reversal underway. But again, given the fact that oil obviously is flushing at present, that will certainly be an overriding bearish factor on the FTSE 100. And I just bring up a chart of oil, and you can see here it's flushing quite powerfully. We're back into that previous resistance equals support now at this region around the $47, $48. We've actually fallen by almost $3 today. So again, oil is your key barometer. Again, daily chart, you can see flush, and I did highlight this given the fact that we had a topping tail and the dollar index is obviously into support, and the markets have subsequently flushed. The dollar index obviously is into support, as I've already explained. Looking at your daily chart, again, your 200 MA is holding and your diagonal trend line is into play. So overall, the FTSE Europe as well, you can see that we had actually put in a bearish candle in today. FTSE 250 remains at resistance, stuck at resistance and not breaking higher. Therefore, it's bearish for the FTSE itself. FTSE Euro top put in a doji candle and obviously is holding resistance. FTSE Europe as well, doji candle, volatility index is obviously into support. And we are certainly seeing the copper as well, potentially into resistance. Looking at a 10-minute chart, you can see we've flushed quite substantially. We are coming into support in the interim, and we'll see how the market reacts when we get there. Okay, so going back to the FTSE, just to wrap up this video, 10-minute chart or 5-minute chart, certainly a potential for a reversal given the light volume, so I'm not going to discount that. But any pop higher will be a shorting opportunity from my perspective, and we are looking at lower lows and lower highs in the next 24 to 48 hours. If this resistance zone here breaks above 6430, then you are back into the bull camp and you are looking at 6490, and then you're looking at 6550, 6600 above. Okay, but that must mean that the dollar starts to collapse and commodities catch a bid, because it's all about commodities at present. Given the fact that the Aussie and Kiwi are certainly into resistance, we are looking at a potential reversal, especially given the fact that I did highlight over the weekend Glencore has completed its inverted head and shoulders target on the 60-minute chart. As you can see, we hit that 140 level, and now we're looking to reverse, and that's exactly what occurred. We have come into potential gap fill support, as you can see below. We closed a gap on Glencore, so you may well see a reversal or a bounce. We did see that on the FTSE to a large extent towards the close, given the fact that we had the AB InBev and SAB Miller increase the offer, and that certainly helped the FTSE off the lows at 6350. But still, the market expects 6340 given the HNS formation, and the 60-minute chart is expecting even more downside weakness if the dollar index catches a bid, which I expect to do given the fact that you have several hawkish statements with regards to rate hikes further down the line. Also, given the fact that you've had this light volume manipulative move, and that's keeping the markets artificially afloat. Once that gives way, then you'll see further downside. Okay, that's a wrap, folks. Be sure to visit cfds.com for your trading needs. Goodbye now.